Okay. So we'll get started, and we will start with the round of introductions. And I will leave yourself, Alan, till are you kicking off, Alan?
Yes,
So I'll leave you to last. Okay, so my name is Anne and I work with the National Traveller Partnership. Angela, yourself, and then Miriam.
Angela McCann, I'm with Bray Travellers Community Development Group. I'm the administrator.
Very good. So Miriam and then Eugene.
Hi, I'm Miriam. I work with Clondalkin Travellers Development Group and I look after the admin and finance here.
Very good. Eugene and then Maria.
Yeah, I'm Blanchestone Travel Development Group. I'm just new here.
Very good. You're very welcome.
Thank you.
Hi, I'm Maria Ward from D17 Traveller Movement, and
Good.
I'm the assistant coordinator.
Very good. Who wants to go next?
I'm Olivia and I work with Cavan Traveller Movement and I'm the administrator.
Who wants to go next?
I'm Mirabella. I work for Navan Travellers Workshop Accounts Department.
Good.
I'm Jackie and I work for Ballyfermot Traveller Action Project.
Pauline.
I'm Pauline. I work for Cala Travellers Community Development Project.
Good. Ian.
Yeah, Ian, I'm the managing partner here in Philly & Company. I just wanted to come on and say hello to everybody and then to help Alan at the end with the Q&A.
Very good. Thank you for your time. Patrick?
Yeah, I'm Patrick Bailey. Hi, I'm from the Offaly Traveller Movement based in Tullamore.
Very good. And then over to you, Alan.
Over to me. Okay, so I'm Alan. I'm the auditor of the NTP, and I have met some of you already from doing your own audits and either being in touch by email or in person. But yeah, so I'm part of Finlay Mulligan. We're firm of chartered accountants and auditors based in Dunleary. It's headed up by myself, Ian, and Hugh, being the managing partner, and we look after a number of charities, including all yourselves and others. And we have made similar transitions from where we're at to moving towards SORP and SORP compliance, especially with the new changes coming from the 1st of the 1st, 26. Okay, so on the agenda wise today, we were briefly chatting with Anne and Sharon just where we kind of want things to go, and I believe Sharon had done a SORP call, which is back in October, November. So we just want to basically add on to that. And then obviously we'll do a Q&A at the end. So I've put together a couple of slides just to help us talk through. We'll go through them nice and quickly. And then I will show you what we would recommend doing and how we go about getting fully compliant within our softwares and doing things in a mainstream way. Okay. The reason why I was asking for everybody what softwares they're on and what we're using in-house is just basically to try and find a way to which we can maybe save a little bit of time for everybody, standardize reports across the board for everybody, and bring everything into a software package that is compliant with SORP. Okay, so I am actually just going to share my screen and bear me 2 seconds, and I will share this one here now, and I will just turn it into a slideshow. Perfect. So can everybody see that okay?
No.
Okay, let me just check. I might just have to do my entire screen. I'll do my entire screen. Okay, so can everybody see that?
Yeah.
Perfect. Okay. Perfect. Bear with me 2 seconds. I'll go to the top. Okay, so there's only a couple of small slides and they're really just as guidance to talk us through. Okay, so what we're looking at doing is we're trying to modernize our systems for charity finance. Okay, so a lot of people are using Sage, from what we've seen there, big red books, standard accounts package, as well as using Excel. Okay, and there is ways in which we can move everything along and basically move everything to our software packages. Okay, so with the reality of Excel is there is a lot of manual imports, and from what I got from talking to people that I've had the conversations with is there is a lot of manual data inputs. Okay, and what that does is it brings about the high risk of kind of errors, duplications. It's very time consuming, and we would need to have multiple sheets for different funds. So what I often see is we will have one bank account for this fund and another for another, and it's a lot of typing. Okay, then what SORP actually requires to do is have accurate fund tracking, have clear income and expense classifications, a full audit trail, and a reliable statement of financial activities reporting, okay, which is the SOFA statement. The SOFA statement is what replaces the P&L in the traditional set of accounts. So instead of our income and expenditure account, we would have a SOFA, okay? And I'll show you an example later on. In order to get Excel to where we need to be, we would have to basically restructure everything, build a lot of reports from scratch, and we'd have to be continuously reconciling. And again, it does bring about the possibility of errors, and it is very time consuming. Most of us are on software, so that doesn't really apply in terms of a SORP perspective, just more from an internal reporting perspective, okay? Key risks, errors due to duplication, inconsistent reporting, weak audit trail, and potential non-compliance. When we go live with SORP, we want to make sure that we are fully compliant with the SORP requirements. And if we were to just backtrack a little bit, what we need to do is we need to look at ourselves from what we were from the get-go, which was a company under the Companies Act. So the Companies Act allows us one set of rules, and SORP then basically says, let's latch onto that and make things more transparent for reporting purposes, okay? And the best way to get that kind of approach will be to have everything in a cloud accounting software. What that enables to do is we will automate our bank feeds so that when a transaction happens today, it's automatically in the system waiting for us to use it and allocate it to our right tracking fund and where it needs to go, whether it's an income or expenditure in our actual chart of accounts. We can then from there standardize our actual reports so that across the board on every entity, we all have the same reporting requirements and standards, okay? And because it's all run from the bank, it does reduce the manual workflow because we can actually, once we track them correctly and we set up our reports, they will pop out by default, okay? And I'll show you examples of that, okay? So I would always recommend Xero for various reasons, okay? But Xero, Sage, you know, it's a cloud accounting software at the end of the day. We need to make sure that we have automatic bank feeds, okay? And the bank feeds are coming in real time. So if we have a cutoff date, let's say for argument's sake, the end of April, and we need to produce a set of reports at the end of April, we should be able to do it within the first 2 or 3 days of May. And the reason being is the bank transactions have flowed in. We would have used AI, which is automatically built into our Xero software that would preload transactions for us into the right tracking categories. And it uses our history usage to determine where it should go to give a best recommendation, okay? So again, it is based on the setup is key, and then bank rules everything. We do have our funding tracking categories, and we also have our built-in and our audit log. So what it means by that is we can actually dive into each transaction and see, okay? Again, I'll show an example of that now in a second. Basically, how do we get there, okay? What we need to do is we need to transition from whatever software we're using at the moment, or even just upgrade the software that we're using, or decide which one you want to stick with it and go with that, okay? Get it all set up. We need to bring in our comparatives. We would usually set up our chart of accounts. We'd set up our tracking categories. We'd then look again at our bank setup, so all the feeds are coming in. We'd then start allocating transactions. We'd produce our profit and loss, which would in turn then become our SOFA statement. And then we'd also have our comparatives, okay? The comparatives are one of the key reporting measures that is usually time consuming. So in terms of roadmap, we'd be looking at 2026 being the year of which we get our comparatives ready, and 2027 being our reporting year. So that for your audit of 2027 will be your first SORP set of accounts. Now, if you are already applying SORP, then obviously that doesn't apply to you, but I'll show you examples now in the Xero, okay? And the whole idea is you train and you support and you apply this approach to make everybody's life easier so that those that are involved in the finance and the allocations work will actually save additional hours so that they can then go after, say, additional funding or do different things to help, because everybody's time is usually restricted when it comes to charities. So the overall kind of assessment for somebody that will be moving with, you review the likes of the Excels or the current system in place. You'd identify all of our different streams and reporting incomes. We plan on migrating. All that means is how do we categorize our different income streams, our expense streams in line with what's required for SORP, okay? And I'll show you that example as well. We would configure it to Xero. So we'd set up your Xeros. We'd set up the SORP required chart of accounts. That chart of accounts would be kind of standardized across all charities, really. And then we set up our tracking categories. The tracking categories are really restricted funds and unrestricted funds, okay? We then basically import your comparison or import your historic data and balances, and validate everything, make sure it's all good to go, set up our bank feeds, set up our rules, set up our reports, and show how it all works. We'd stay in the background, we do our hands-on sessions, daily processing of reports, and basically you go live, okay? And then if you needed it, we're always there for check-ins, year-end support. Some guys that which we've done this for is we sit in the background and they ring us. The key thing that we like about Xero is that you can actually have multiple users logged on at the same time. So you would pick up the phone and say, hey, I'll need you to look at this transaction, and we do it together. So it's ongoing kind of training and support is usually how it works best. That's just what we've done with some other charities, but there is obviously everybody's different. So in terms of timeline, you'd be looking at about 1 to 3 weeks max to get it all up and running, okay? That's just a full overview of them charts. I know I've gone through them quite quickly, but I just want to get in and show you how it all works. And the overall aim of the outcome is reduced administration time, improved accuracy, full SORP compliance, and better visibility in governments, meaning we can use our time to spend it on other different aspects of the charity, okay? And then the next step is really just reviewing everything, get on board, get the migration plan into your system, whatever it is, with Sage, Xero, and then go live as quickly as possible, okay? So that is just them quick charts, okay? Is everybody happy for me to keep going? I'll just show you a demo on Xero.
Yeah. Yes.
Yeah.
Perfect. Okay, let me just pop this open and let me just jump into Xero. Okay. So I'm just waiting for it to load. So this is a demo charity CLG. Can everybody see it okay? I know it's loading on my screen, but can you see the Xero blue tab?
Yeah.
Yeah.
Loaded.
Now. Okay, so those that have Xero, you'll be familiar with the dashboard. You can fully customize your dashboard in certain ways as to what you may like to see in terms of graphs, charts, okay? The key thing is when we log in, we'll be able to reconcile our bank, assuming we have everything set up. So the key thing is always setting up our chart of accounts, okay? So if we go into our chart of accounts, we can have all our assets and liabilities, our equity, expenses, and revenue, okay? And from a SORP perspective, they want us to be reporting in a very specific way so that we can recognize our income through our charitable activities and our different streams and our other donations and other revenues. And they want us to report upon our expenses in a way that it is charitable kind of activities as well as fundraising expenses. Okay, so it's important that we set up all of them in that manner. So we can have our assets. Some may have freeholds and various different fixed assets and equipment. We can then set up our liabilities from who we owe money to, wages, control accounts, etc. And then we can have our key ones for us, which will be our expenses. So in our expenses, we can have our direct costs. We can have our actual administration expenses. Okay, so for the likes of our events, our insurance, our rates, and so on and so forth. Then we'll have our income streams, and our income streams doesn't actually have to be all of, we've got income from this stream, so we need to create a new code from it. We can actually just have charitable activities, donations and legacies, and other activities and incomes, because they're the ones which is required in our SOFA statement for our set of accounts. When we get to the notes of our accounts that supports is when we will actually need to break those out in more detail. Okay, and I'll show you an example of that now. So that's kind of step one, chart of accounts all set up. And then we would then move to our tracking categories. Okay. In our tracking categories, these are more the advanced settings. We would set up where our streams are coming from. So the Department of Employment or their DCED funding. Okay. So in here, I've done an example where we can have our restricted funds and our unrestricted funds. In this example, I've just done Dublin County Council, local support that has restrictions, donations that have a restriction, Department of Employment Affairs, and Department of Children, Equity and Disability. We can also have our unrestricted funds, which will be set up based on, our admin fund that's free for us to use, and our donations that are unrestricted, okay? We would then, that's all of our background work done. So once all that's done, we can then start allocating our bank transactions as they come in and as they happen to our tracking categories, okay? And what we can do then is we would have a look at our items to reconcile. Now, I've only got 3 here at the moment because I've looked at all the other ones. But what we should see is these should be pre-populated based on the information that I've done historically, okay? So we see straight away there with the Vodafone one, it's an example, 5596. That's what came in on my bank feed. So the bank has said, this is the transaction that happened. Now it's up to me to match it off, create it, or put a note on it. We can then select that it's a Vodafone, it's going to our telephone, and it's a monthly phone bill. We can select what kind of, whether it's to go under restricted funds or whether it's to go under an unrestricted fund as well, okay? So let's say for argument's sake, this one is to go under the DCED, and we can reconcile that. We can also set up a bank rule as well, okay? And what that will allow us to do is every time a transaction comes in, let's say for Centra, it would automatically apply the rule that Centra is always going to be a canteen expense for our milk, and it will always go to our unrestricted admin fund. So you are literally clicking OK and it's gone. You can do your 50 or 100 bank items quite quickly once it's been set up correctly. If it isn't set up correctly, quite often I would see people spending an awful lot of time on it, and the AI picks up inconsistent rules and it tries its best to help you along the right path. And people see an OK and they'll click the OK, but unfortunately it may say things, it may send an Adobe subscription to computer costs for 1 month and then a subscription for the next. And if somebody has done that and said inconsistent, it will continuously apply the inconsistency. So what we do is we'd set up our bank rules. The bank rules will actually enable us to split out a cost across multiple streams of funds. So let's say for argument's sake, we may have an overhead, like a light and heat, and we want to do 20% to our DCE funding, 20% to say our Department of Employment funding, and so on and so forth, okay? I've set up rules. These are all the rules that I've set up in the background so that if we have, for argument's sake, let me get one, a Bord Gáis fee in there, okay? This has been set up to be split across multiple ones. So every time Bord Gáis comes in on our bank feed, it will be split by 20% and 15% across our different streams. And it will always happen. It'll always have the same rule. So every time we pay our gas bill, this will automatically apply, and we know it is consistent all the way through. So that's pretty much, we'd reconcile all of our bank transactions. And then what we'd move to then is, if we correctly recorded them, we should be able to view our profit and loss. We should be able to view as an overall view, so our income and expenditure and what our combined remaining surplus is. We should also then be able to look at it from a restricted funds perspective and an unrestricted funds perspective, and see of our income streams, what funding is available at any point in time of that actual stream to be used. So when we go into our reports, now what will happen there is we've got multiple reports, which I'll briefly run through some of it, but I'll just stick with the profit and loss for now, okay? In our profit and loss one, I've customized one that will actually change to being an income and expenditure report rather than a profit and loss. So I'll just show you how it kind of defaults, just loading. So in our standardized profit and loss, we don't need too many headings in terms of incomes and in terms of expenses. We just need our core one. So we have our charitable activities, our donations, our legacies. And in this example, I've only got those ones, okay? We can, of course, compare it with our comparatives. Again, this is a one for argument's sake. I just put in income in the comparatives rather than expenses. But we can see our overall kind of surplus for the year there on 2026 based on the income we received is 143,567. We can then create a restricted funds and an unrestricted funds income and expenditure account, which would then look something like this. Yeah. So what we have there is we have our income, and up on top headings, we have our funding stream. So our DCED, our employment, our CE employment, our donation restricted, and our local initiative. Okay. So all in all, and we're our unrestricted fundings as well. Okay. And we can dive in and get a breakdown of any of them. But the key thing here is how we have mapped our transactions allocates against each heading. Okay. So that we know that of our surplus that's remaining, of our 140 odd grand that was there a minute ago, we've got 6.3 of our DCED left. We've got 16.4 of our CE scheme one left. We've got 1,100 of our donations, and we have our local county council of 6,500 remaining, and our unrestricted funds 113. So what we can then do is look at our unrestricted funding report as well and see a full breakdown of that. So our unrestricted funding will be, you know, donations that are unrestricted, and our day-to-day admin funding, whichever's unrestricted. And we can see how our expenses have been allocated against it. And we can review them. We see, oh, there's 110 grand left of our admin fund, and we have, you know, 2.8 of our donations received. And you can also see there that is our restricted funds also comes through in a summary. Okay. The key thing for most people, let's go back to the restricted funds, is the ability to then dive in to the transactions from an oversight perspective to review what actually is contained within the likes of, say, accountancy or our light and heat. We can see there in our light and heat, we would have multiple. See the way I have 177 across DCED and donations and the Dublin County Council one. The reason why they are split evenly is based on the rule that I've set up. Okay, so let's just say, for argument's sake, I will click into our light and heat one here for the DCED, and we want to make sure that that actually is light and heat. So in here, we can see there's our transactions. We paid our board gosh on the 4th of Feb. That our contribution was €85 against that one. And then we have our 4th of March, which is our €50. Everything's great. We should be seeing one every month or 2 months. Okay. And it's just a quick oversight. We're happy and we move on. We can do that across all of our headings. We can also go one step further. And I'll show you what I mean by that is Xero allows you the ability to link in PDFs and receipts for full transparency. So if we take our telephone one in here, for argument's sake, we should see that it should just be our Vodafone bills. But we should be able to say, well, hang on, you're telling me on the description that you wrote that it was a monthly phone bill, but how can we be confident that it actually is the case? It will bring us in to see the actual transaction happening through the bank, and we can view the details there. Or we can attach a PDF of the item, okay, and say, this actually is the Vodafone bill. And at least then what that does is, if you were to do that with all your receipts and all your purchase invoices, come the end of year or any reports, you will be able to provide your auditors with the information. So the aim would be you'd link them in with your Xero at a year end and say, hey guys, everything's in there. Go ahead and go do the audit. Straight away, I know the audit from some people can be quite stressful and time consuming. If all the information is already in there, the auditor will have minimal requests to you. He will have some still, but his ability will then turn to a more testing of the controls, and the output will be better for everybody. And you can actually use that time combined with the other time saved across the year in other ways that's required. We can then move on one step further, because that only does it from an internal perspective. We can create another report, which would then be our SOFA statement, which is what's required by SORP compliance. Okay, so what replaces our traditional profit and loss, I'll just go back to our reports, is actually the statement of financial activities. And within that, all we want to see is our restricted funds column, which will be all of our tracking restrictions in one. We want to see our unrestricted. We want to see our total for the year, and we want to see our comparative. Okay, so we can then customize this report in here and generate it for the full year. So this is just based on what I've popped in for 2026. And as I said, I remember I had the comparatives in for 2025. So we can see of our total funds of 2026, we had 227,500. 120,000 of that was unrestricted. 107,500 was restricted. And our expenditure is all on charitable activities. If we had anything on fundraising expenses, it would just have another column in there and say fundraising activities. And the cost may be within unrestricted funds or restricted, whichever. Okay. That would be your actual SOFA statement. If I PDF that, it is at the click of a button. You can run that at any stage. We can change the dates, may just be say for a quarter. You know, we might just say for Jan to Feb. Just pop back. All your information is in there. So that's what I mean by having this setup key. See the way our expenses have reduced. So we got all of it, in this case, this example, we got all of our funding in January, and we've only spent, 20,800. So you'd be telling the board or your internal meetings, this is how much we've got left on each activity and each category and each funds. Okay. What that does is it helps for better decision making, and it also saves on the stress of people. Quite often what we see with manual internal reports is they're very formula based, and they're very administrative based in typing. So there is the potential for errors, but it's the time that is actually spent gathering them. The data can sometimes be a little bit outdated. There's no reason that once your bank's done that you can't have your management reports within a couple of days rather than a week or two. And then the final report is just really your bog standard balance sheet. Okay, so the balance sheet itself hasn't changed much. It is very much like what we're going to do in a normal full set of accounts. You can run it as at, say, for example, today. And here's our balance sheet. So that's our bank balance. That's our, I've just done a journal of accrued income, which is our 2025 figure. And we have our PAYE control account and our wages. Okay. One big key thing on SORP requirements, okay, and is we're moving. So what people do is they usually reconcile their bank, money in, money out. What that is it's doing everything on an income and expenditure basis, which is known as a cash basis in accounting terms. So with full SORP, we're required to latch on to the accounting standards, which preset everything. So the reason why the SORP update came was on the back of an FRS update. And the FRS update is basically saying that we have to apply the accruals concept to our charities for our revenue recognition. And we also have to recognize leases and stuff on our balance sheet. And for the likes of, if we're renting a premises and it's greater than 12 months, the lease, we have to create a right of use lease or right of use asset in our balance sheet as an asset, and a lease liability, and unwind it over the duration of the lease term. It's not major, but the key thing is accruals concept is what needs to be applied. What that means is we have to post our journals, and the biggest one is our wages. When we pay somebody from our bank, the payment of the wage element going to, say, you know, Alan, is say €250 a week. That net wage element actually goes into our balance sheet and not our profit and loss as at the expense. And then what we do is we need to post a journal based on our payroll reports. And we post our gross wages to the P&L. We will post any pension elements to our pension control in our balance sheet. And we post our net wages to our net wage control account, and our taxes to our PAYE, our tax control account with revenue. So straight away, we then allocate our gross expenditure to our right tracking category to get more concise kind of reporting. Usually what I would see just historically with other clients would be they will put the net wages straight to the P&L as a wages expense in the admin section. They will say that this expense relates to this tracking category, but come the end of the year, they have actually got a cutoff issue and the figures aren't actually 100% accurate. So the idea is to just get things more accurate, okay? Then, as I said, from an audit perspective, I'm trying to save more time and all SORP, you can actually apply through your funding within, you can create your kind of templates and stuff in Xero, but Xero also has a files allocation as well, and it will store your data for a minimum of 7 years. It will always keep your data once you're subscribed to Xero, but when you say cease, let's say, okay, I don't want to use Xero anymore, I want to switch to Sage, it will keep your data for 7 years. So it takes care of all of your compliance requirements from an accounting perspective as well. And if the CRA was to ever audit you, everything is there in digital format, ready to go. Xero will also keep digital stamps, so we can preset users' rights. So somebody may have the ability to just view reports. Somebody may just have the ability to reconcile the bank. Somebody else may have the ability to publish reports. So it will create a digital stamp and say, Alan published this on the 14th of April. And what we can do is we can create a new file in our inbox, and we can also then drop in the likes of as our bank statements come in, we can bring them in. As our purchase invoices, if there's any statements or anything that aren't allocated, we can pop into a statements folder. So it allows you to kind of go paperless in a sense. And we have done this before for other people, and it does work really well. What we can do then is have a look at where else can this be advantageous to us, okay? And the key thing that I think for a lot of people where they get caught up on time-consuming stuff is budgets. Xero does have a built-in budget manager, and we can use it and we can pre-populate all of our budgets in there. And if you can do it for the full 12 months, I'll do a wide view there now. We can do it for a full 12 months. And again, it is based on our chart of accounts, which is our P&L that we preset based on the other information, which is charitable activities, donations, legacies, other activities, income, other income, etc. Okay. We can, it does help us in that we can send it all across. But what we can do is we can download it, we can edit it in a way, and we can import a different variant of it if we weren't too happy with this budget. And that becomes your standard reporting. We can then compare our budgets with actuals and build reports that we need for an internal reporting perspective, so that come your internal meetings, it is once our banks are reconciled correctly, the click of a button gives us all our reports, and we can share them consistently with everybody that needs to see them. And no matter who's looking at them, they never change. If a member of staff changes, the reports don't change because it's standardized in a way that is most time efficient and gives the information that's required. So the key benefits then of Xero is really multi-user access. So let's say, for argument's sake, I work for a charity and I'm working, say, alongside Patrick and Ian, and we might say, right, guys, let's have a look at this transaction at OTM, and we're all looking together. We can all be logged in together. If I click something, I tell the lads, refresh your page there, and they see the updated version. It's that efficient. The likes of Sage and stuff doesn't allow multiple users to be on at the same times quite often, depending on different variants of Sage as well. The customizer of the reports, that SOFA statement that I showed you, and the income and expenditure and the tracking categories and the unrestricted, is all reports that I have created. They are not by way of default. So using the Xero by way of default will not generate those reports. We have to customize them. And that's why it's important to kind of start at the starting point, chart accounts, and then get into our tracking categories and then reports. It does allow us to save a bit of, you might save a couple of hours a week or a month. That across the year can build up to a week, 2 weeks for the admin team, which they can spend their time somewhere else, maybe directing it towards going after additional funding, because everybody knows charities, it's hard to get the funding that which they need, and quite often they don't have the time to go after it. So there is that benefit there. It is very much an investment in your accounting to be fully financial kind of compliant. Now, just before we go to a quick Q&A, to show you how that works in real practice, I do have a copy of the Wheel Annual Report for 2024. Okay, this is really, really big. You might just tell me if that page is loaded for you. Has it? Yeah. Perfect. Let's just try that down there now. So what we'd have is, this is 88 pages long. I'm not saying that this SORP requires that, but what SORP does do is, its new report requirements, and I'm assuming Sharon has gone through all this, but we can answer any questions. Is it will take a tiered approach, okay, based on your level of turnover. Tier 1, 0 to $500,000, has a set number of requirements. Tier 2 is between 500,000 and 15 million, which is where most of us will latch into, and 15 million and beyond is Tier 3. That has basically set the criteria of what we need to report within our trustees report. From a normal set of accounts moving to a SORP set of accounts, the director's report is ultimately renamed as a trustees report, and we have to include more data: who we are, what we do, how we're doing what we're doing, what's our outcome, a reflection on the financials, who's involved, at what level, we're on the board, and various different report requirements. It's a lot of a narrative, but once you get the narrative right from year 1, it becomes the basis for year 2 and so on. Okay, but if we just flick down through these, we can see here from this start page, okay, it is all about chairperson's report, our board, our team, our numbers, and then they get into trustees reports. Okay, so they just decide to do an extra 10 pages of themselves. The trustees report they have is roughly 50 pages long. It doesn't need to be that long. Okay, we just need to hit on the right headings, and then we get down into the more nitty gritty, which is our SOFA statement on page 60. Okay, so I'll just briefly show you on page 60. Where is it? 60 odd. Hang on. There we are. So in order to achieve, this is the actual real example of what a SOFA statement should look like, which replaces our income and expenditure account, or a profit and loss in our set of accounts. To achieve something like this in Excel is very, very manual, because it will involve multiple kind of different Excel tabs, different formulas, and a combination. And there is the risk, obviously, you click one button, you don't know it's wrong, and all of a sudden you spend a lifetime trying to figure out where it all is, okay? We have our income from donations, legacies, charitable activities, and other notes. They are all going to be further detailed in note 4, which breaks down all of our different income streams and the amounts, okay? Then we have our expenditure on our raising funds, which I was saying, if we had our expenses in relation to our raising funds from our normal admin fund, we would include it in here. If there's anything restricted, we would also include it, okay? We have our total funds, which is our comparatives over on the right-hand side. We are going to use, for those that haven't applied so far, we should be using 2026 as our comparatives, with 2027 being the breakdowns. We then have to have a reconciliation of our funds, our net movements, and our total funds brought forward, and our net movements in our funds. Remember, one of the key things with our requirements is our deferred income elements of unspent funds, for whatever reasons. Within our zero, when we run our actual report at any given stage, I'll just show you real quick, that becomes our deferred element. So there's no longer a question of what is it made up of, what's our deferred element, or who is it. There's no Excel listing. It's all here. It's all live. And we can run it at any point in time. So in this case, our surplus is effectively our unspent amounts. Okay, and our deferred element will be our restricted elements. So I'll just pop back there now. Then we have our bog standard balance sheet statement of financial position with our fixed assets, current assets, liabilities, and our funds rather than reserves and equity. Okay, it is at our statement of cash flow, and then from there we get into our notes. The notes will be very similar to that of what you're used to in a normal full, 20-page set of accounts. We just have to have a little bit more explanation on our income streams, and also about ourselves. Usually the big one is we have to know, remuneration of people and how it may fall into certain categories. This here is note 4, which is a breakdown of the summary, which we had up top. I'll just convert it across there now. So we have, in this case, they had our donations and legacies, our charitable activities, and our other trading activities. They were the columns that were on the left. They have now moved them to the headings, and they have the breakdown of all the names. Okay, and that information actually comes from driving down within these. So if we wanted to look at, say, for argument's sake, our Department of Education or whatever fund, we could click in, we could see it there. We can actually have the remittance of our income attached to it as well. And then we move on. Now, we may have multiple in there, but that's where all this information will come from. Okay, we have our total funds. That ties back to our SOFA statement up top. And then our comparative also ties up. Okay, then I'll just turn it back around. There we go. Then we have a breakdown of our expenses, which is basically our final page in our accounts that shows this is what we spent all of our money on. This is the amount to our restricted funds and our unrestricted funds. And this was the amount through our charitable activities and our raising funds, again, just each subcategory, and our comparatives. We then have a further breakdown of our staff costs. The keynote with SORP is documenting the bands of remuneration for employees. So if there's anybody in the band 60 to 70K, 70 to 80, so on and so forth, we do have to disclose the number of individuals that are on that rate of pay. And if there's any other kind of key related notes, for example, paying members of the board, it will be deemed a related party transaction, which is material by nature. So we have to disclose that. We'd also disclose anything that all these notes link back to our balance sheet and our pre-populate from there. Any accrued income, which is grants amounts to be received post year end that relate to us that we haven't received yet. That's part of the accruals concept. It's just the opposite effect of the deferred income. Deferred income is grants that we haven't spent. Accrued income is grants that we should have got in but haven't just yet. And we do them journals in zero. And we have our statement of funds and our usual notes in there, okay? None of these are too much different from what we'd have in a normal set of accounts. And then we have our detailed income and expenditure from an income source. Again, this is really just mirroring what was up top. But this is just as a combination. Whereas if you remember note 4, we basically had our 3 subcategories saying that the National Training Fund was it had a portion in each one. This is just showing it in a combined version. So again, this information is pulled from your software. Whereas if we were using Excel, this is another report that which you would have to create. Okay, so you'd have to create your internal reports, then your SOFA, then your note 4 reports, then your total reports. And it is an awful lot of work from a manual perspectives. And then we have our expenses, and then that's pretty much it. Okay, so that is a quick overview. I'm just going to stop sharing my screen for a quick second. Now, that is a quick overview of where we need to get to from a SORP perspective. There is a lot in it. And I'm assuming, the last SORP course was basically telling us about all the changes that are coming. So I think the next stage would be just if anybody has any questions or anything like that, just shoot them out in general.
Alan, can I just check something with you? So
yes.
Is it our 2026 accounts will have to be done to SORP, or is it? I'm a bit confused about what year.
Not a problem. So with SORP, okay, and the new rules, everybody thought that they were going to make it mandatory, okay, and thankfully they didn't, but they are saying it's only a matter of time. They've been saying that for a little while.
Thought it was.
they may make it mandatory. Everybody thought it was going to be mandatory from the 1st of the 1st, 2026, meaning your 2026 financial year was SORP, which then meant you had to do an awful lot of work to get your comparatives right. Okay.
Yeah.
So if you imagine if we take this approach of getting your 2026 as your first year tracking as SORP, you are doing your comparatives without any additional cost.
Okay.
So because all the data will be there come 2027. Now, from a CRA perspective, the charities regulator, SORP is best practice. It's not a mandatory requirement in Ireland, but it is in the UK, and it is more than likely coming here. It's just a matter of time. And I'm sure from your own kind of conversations and when you get together, I believe that the aim is to move everybody to SORP. I know Patrick applies SORP and OTM. So if you are already applying SORP for year 2025 or prior, you must apply the new SORP updates in 2026. Okay. And that's where the adjustments are coming from. Okay.
Because we would be still FRS.
Yeah. So from a charity's perspective and a company perspective, remember, if we bear back to when we first set up, we were a company. Okay. So we must apply Companies Act and Companies Rules, which is FRS. And FRS technically allows you to choose 102 or 105 or full FRS. From a charity's perspective, it would not be good practice to produce 105 because it is very, very minimal, even if we meet the criteria. FRS 102 1A is usually the go-to because it gives enough information. When we apply SORP, we are not allowed to apply 1A. We have to apply full 102. Okay, so you're still applying FRS, which is the accruals concept, but you are then also applying the SORP best practice, which means we take out our director's report and put in our trustees report, and we take out our profit and loss or income statement, and we bring in our statement of financial activities, and we bring in additional note disclosures because it is all about transparency. Okay.
Okay. Thanks.
Perfect. No problem. And anyone else?
Yeah. I just saw when you were looking through the reconciliations, I just noticed that there was a button there, auto reconcile.
Yes.
What's that about?
So auto reconcile is basically using AI in the background to automatically reconcile transactions based on historical way in which you reconcile them. So for argument's sake, you would only ever turn that on after you spent a number of months carefully mapping out where everything is to go. And what I mean by that is your telephone bill, you'll have set up your rule to go to Vodafone, always goes to telephone, and it's always split across these different heads. When you have that rule set and you've got that across every single transaction, you can apply the auto reconcile, okay? And what that does is, rather than you clicking OK, it will automatically have that OK done for you, okay? So it's like having an assistant. Okay. But what you have to do then is, you have to view the auto reconcile transactions to make sure that everything's okay. So you become a reviewer, which again saves on your time.
Yes.
But I would always leave that sitting in the background. I'd never turn that on for an entity that's switching to zero right now without having done at least 3 months transactions, at least. Okay, because there is the possibility that there was one transaction that's new and it auto reconciles based on what you believe that it should, or what system believes it should be. And then you have to unwind it and fix it. So you don't want to have to unwind anything because that involves the same length of time as if you hadn't done it. So we get the system really watertight before we pop that on, and that is like having an assistant in the background.
Thanks.
Okay. From I think one of the key ones that everybody was saying there was internal management were doing our Excel reports. Does anybody think life would be easier using software if they were created in at the click of a button? Or what's your kind of thoughts in comparison to using Excel on internal reports versus a software?
I don't know. How does it affect, like, we're a big red cloud. So I'm very confused because I wasn't at the last training session. So this is all kind of new to me now. So I don't know where do we stand with the big red cloud, like, like in the changes and everything. So
yes, so it would be like anybody moving a software. So it'd be like moving from a big red cloud is effectively your accounting software package. And what you would do is you would be moving to a new one, which would be Xero, is what I would always recommend. Other ones is Sage, but Xero is the one I would recommend. So what we do is we take the data from Big Red Cloud, migrate it over into Xero, and then you start working on Xero. And the best at that stage would be if somebody was to say, hey, I want to migrate over to Xero, we would take your 31st of December 2025 set of accounts that's in the Big Red Cloud and all the data. We would bring it into Xero as our opening balances. We would then set up your chart of accounts, set up your tracking categories, obviously having a conversation with yourself to say this is all of our income streams and how we need to record each. And then we would get the bank set up. We'd set up our bank rules. We'd set up all of our bank feeds, and we bring in our transactions from the 1st of the 1st, 2026. And we would use that to form the basis of our training exercise and to basically preset where we want all of our rules to go. And then come the end of that, the decision would then be of the likes of yourself. Do you need us to be on the phone in the background, or are you confident enough now to continue on with Xero as your new package? And that's it. And you leave the Big Red Cloud behind.
It's a bit nervy, so I think
it is nervy, and any change is nervy.
Overwhelming, like the whole thing.
Yeah, and it is.
What
and
if
it is. Don't
you
worry.
want to change package though, Alan? What if you wanted to stay with whatever you have at the moment?
If you wanted to stay with whatever you have at the moment, you need to be able to create all the SORP required reports. That's the downfall. Is like if you imagine taking the example there I was showing you in the actual full financial statements, if you're using the Big Red Cloud, you need to be able to ensure that there's tracking categories to track your restricted and unrestricted funds, and that your mapping of your transactions is correct, and that you can generate a SOFA statement.
So you're making more work for yourself that way, really, aren't you?
No, you're making more work for yourself if you were to do all the manual way.
Right.
Okay. We have the Big Red Cloud as well, and there's no. From what I can see, like they haven't made any changes. Like see the way on the payroll system when My Future Fund came out, they all had new parts on the updates. But as far as I could see, like Big Red Cloud has done nothing to kind of change the reports or anything like that, to take into SORP into account. So, should they have, or are they just?
They're probably like they would be an older software providers.
Okay.
They really haven't updated their systems yet.
Right. Okay.
Unfortunately.
Why do we? Sorry, jumping in. Where do we stand with the payroll? Because we've got Thesaurus payroll as well.
So we've Thesaurus as well.
Bright pay now, kind of thing. So it's so that's kind of like another step. It seems like we have to make an awful lot of changes. And it's scary. It's to be honest.
It is.
I just
want to say that the proposal would be. I think what Alan's trying to say as well is that Xero will eliminate Excel. Is the other side. Completely. Where I think you're probably spending a lot of time in Excel. Going forward, if once Xero is implemented, there won't be any need for Excel anymore.
No.
Like we would do like monthly and quarterly returns to different funders, and they have reports in a format that they need them in because they then collate them and send them back to the department. It's like we would still need to do that. No,
like Xero will do it once the information is in there. whatever report you need, it's doable in the Zero. And again, it's just a press of a button, and it'll be done
I know,
every
but like
single time.
let's say the HSE, the THU unit would have like a report. The format is their report, so they want every report coming back in a certain way, because then they pull them all together to report back into the department.
And that's on Excel at the moment.
It's on Excel, yeah. Most
We just need to use Zero to pull the data and fill in the blanks.
Yeah, so whatever's on Excel, there's the ability in Zero, which is probably the reason why we always recommend Zero, to design whatever report you want, and whatever report that you're producing on a constant basis can be mapped in Zero and become. You move from Excel to Zero to produce that report all the time.
Okay.
The other thing on Zero is you actually can export to Excel. So you can, any of your reports, you have the option to export to PDF or to Excel. So we can export it straight to Excel. If we have it created in the way that was required for the HSE, you run the report. Because your banks are reconciled, you would go into the report, you change the dates, run the report, export to Excel, and you're done.
Okay.
So that's where you save the time.
So anybody who's thinking of migrating over to another system, Zero is the one that's recommended.
Yeah, 100%.
Okay.
And what is the cost all involved with that?
Yeah, so like the cost really depends on where you're actually at. So each organization is different. Some that are just setting up, for argument's sake, will be a lot lower cost than a migration. It would be usually, from ones that we've done with experience, we've done a lot of these. It usually comes in and around the $3,000 to $4,000 to migrate everything across, and that also be a little bit of training and getting us going. And then it's a matter of you're set up and we're good to go. Do you need us in the background, or do you need us to help with it? And then we just assess what the volume of transactions and the workload is. Quite often people actually just say, we're happy, train our staff. So we do a little bit of training. And once they're trained up, just stay in the background. If we need to ring you, we can ring you, and just keep us on a small little retainer or whatever for, $200-300 a month kind of thing, so that they can ring and revisit it every 3 months, wind it down.
Is there an annual subscription though for the package itself?
Yes. So Zero itself is usually about, let me just check, I think it's about $40.
$50 a month.
Yeah, a month. But what we can do is
$50 a month. That's what I'm paying.
$40. So we're part of a Zero network,
Australian
and we can get discounts. There is different variants. We may even be able to get some. Again, it depends on what level you want to go. We may be able to reduce you down onto the starter pack, which would be roughly around $20, I think it is, a month. So depends on what you want to do. And what I mean by that is some people take Zero, get it set up on the starter pack, and they move to the standard because they produce an age payables report. And when you're producing age payables reports, they will use this additional add-ons to mainstream everything through. So it all just depends on whether or not you need payables. I don't think anybody does at this moment in time. And everybody's just, pay as the invoice is raised. So some may actually be able to drop down into the standard kind of basic package, which would be, roughly $20. But you'd always be budgeting around 25 to 40 euros a month.
I wish we'd had this call yesterday. Our big red cloud our renewal was yesterday, so we just paid for the 2026 subscription.
Could I just ask Angela, because Angela, I suppose Bray is very typical of the projects with all of the things that you have to juggle, and you've been involved for quite a while. Would you recommend Zero?
Well, I've only just started with Zero, and at this present moment, we are just trying to set up our chart of accounts. I have imported all the bank transactions for 2025. It didn't go back full 12 months, so we had to manually bring in the January and February. And now I'm in the process of allocating them to the various costs. So we're trying. So basically what I was doing was tailoring our chart of accounts to match the 2024 comparatives.
Yeah, I get you.
So that you could show like for like. But now it would appear that we have to do further analysis, and you're talking about tracking categories and stuff.
Yes.
Because
if we're going to go down the SORP route, yes, we do have to. And usually what happens there is that we find is somebody may go off and set up their SORP, and then when it comes to an audit or whatever, they weren't shown or given the direction as to how to set it up correctly. And what happens then is somebody has to refix it.
Yeah.
And
but it can easily be refixed, can't it?
Yes, it just depends on what stage you're at. So you've gone back to do 2025 onto zero, have you?
Yeah, because I would have been Excel up to that.
And
so
did you have your
Excel
reports up to the end of 2025? So if you were to get your audit done today, would you be ready for your audit for 25?
Well, with Excel, I would have been. But not with zero,
okay, so nearly what we'd say there would be you would start from the 1st of the 1st, 26.
Yeah. Okay. So if I continue out 2025, then I'll be ready to do whatever we have to do from 2026.
Well, it's actually the other way, if you wanted to save yourself a bit of time, would be use your Excels for your audit. Okay. Your auditor then creates your financial statements and can give you what's called a format of trial balance. Populate that into your zero as at the 31st of December 2025, and your bank feed starts from the 1st of the 1st, 2026. And what that is yes, there's historical data in your zero for 2025 on a summarized basis, but 2026 becomes your first year active on zero. And then it continues into 2027. And then for year end 2027, you are in a position to do your SORP full financial statements. And it doesn't require you, like if you're going back in to do 2025 for the full year, you're duplicating all the hard work that you've already done.
I know, but that's the way the accountant wants it. He didn't want to
why
take the Excel spreadsheet. So
yeah, but he should have.
It wasn't my choice to pick the accountant. I'm just doing what I'm told. So now I'm redoing 2025. But as you say, there's an AI generated thing in the background. So once your bank feeds come in, and if you have the right accounts, it will bring them into the relevant cost centers.
It will populate them based. Yes, that's how. Remember the feed I was showing you where it comes in. That's the bank feed, and you've got to set up your rules and your tracking and everything right. If you were to just continue on doing the way you are and the P&L without the tracking categories, you're probably going to push out SORP an extra year.
Okay.
Can I just answer or ask? Mirabella is asking there, when can we assign a grant as unrestricted funds? By and large, we don't operate with unrestricted funds. We operate within restricted funds. So every grant that comes in has restrictions. So the vast majority of them will be restricted. Sometimes you've got a bit of historical money, or somebody gives you money and doesn't restrict it. Then it's unrestricted, and it means the project can decide how to spend it, and it becomes unrestricted. But 99%, would you agree? About 90%, 95%?
Yeah, 100%, yeah.
Well, we take a proportion from some of our core funders, which we call admin and management, a charge of about 7 or 8%. Which we would treat as unrestricted. Then we would move that into a bucket and have it as, and very often we have to pay wages out of that as well, so.
But he fulfills the restricted bit by assigning it to management, because that's what you've applied for. You've applied for management funds. So that's the restricted bit. And then when it goes into your fund, it becomes unrestricted.
Of course, and that's no problem. So what you do there, while it's restricted, in the year at which it's restricted, we would report it as being restricted. And then in the year at which it becomes unrestricted, we would then reverse the values and change it to an unrestricted value. That's all it is.
That would for us, that would normally be in the same year, like the funding would be received, and like let's say we get it monthly, so a proportion of that would be restricted, because all of it will be restricted, but then when we move it into the other account to fund overheads and whatever else, then it becomes unrestricted once it's in there.
Perfect. All we got to do there is allocate the journal. So we create the journal, and you go through that as part of the training. Would be, let's say we get in 50 grand and 5,000 of it is going to be unrestricted. We would basically say that 50 grand came in, 45 is going to be restricted, 5 is going to be unrestricted, and that's how a report's generated. And it's through the tracking categories. The tracking categories are really of most importance to us. Without them, your reports will not generate the right information.
So can you just take these admin, administration and management fees and just take them as unrestricted from the get-go as soon as you get them?
Yeah, you could allocate it from the get-go, or we could do it at the end of a quarter if it's just like an excess balance of the fund, an unused element. We could then do the movement journal.
It's not an unused balance. It's a specific charge that we make. It's kind of like
then it'd be best to do it from the offset.
Yeah,
and that would be no problem.
Yeah.
Again, like the power of Xero once things are set up correctly it's like having a right-hand person.
Do it.
I'm sold.
Yeah, I'm getting there with it. Yeah.
I know, but I just say to you,
it's like,
Alan, like I suppose at this point in so far into the year, like we're into the second quarter, like Anne said, all of our funding is restricted. So at this point, like we would have very little wiggle room with like a 3 to 4 grand setup cost. Like it would be at this point in the year, like it would be.
Of course, and budgets are always set from the outset. I completely understand that, and it may be that like there may be the possibility of a funding that, and you may know best, that could be obtained for an investment within our financial infrastructure to be fully compliant, because that's what we're trying to achieve here. It is an investment in financial compliance. It is not just to get somebody to come in to say hello. And again, it is an investment. So like the onboarding is a one-off. It is the whether or not we budget for ongoing training or support. Like some guys that we've done this before, we become their external bookkeeper and we link in with the coordinator a lot. Other guys which we do this for, they want us at the end of the phone. They want us to help with their payroll, or they want us to help with their complicated transactions. And that's all it is. And obviously lesser values. And
Alan, can I ask you, is there payroll systems that you work better with Xero, or
yes? So
like Thesaurus, so
Thesaurus is old.
It
is quite old.
It does what you want it to do. Like it
does. That's the thing. Software, like any sort of payroll package, will do what you want it to do. It's very rare we would ever see an error within a payroll package. 99% of the time they're absolutely fine. But we would see all new clients and even older clients from Thesaurus move to BrightPay. It is really, really good. It does have a link in with Xero, but the migration of it for tracking categories isn't necessarily exactly correct and requires a little bit of oversight. So what I would recommend is we would create the journal in our wages journal in January, and then we copy it 12 times. So we just need to fill in the blanks every single month. So it's as easy as that, honestly. So you take your monthly report, we fill in the figures, our taxes, who's getting what, because remember, it's important to note that, say, Ian is recorded under the CE scheme, Alan's recorded under the admin restricted funds. So when we have our tracking categories set up correctly, we can allocate the gross wages to the right fund.
Okay.
Again, it's just more clarity.
So you're better off not doing an import from BrightPay into Xero. You're better off just doing a monthly journal rather than weekly payrolls over. And I'm assuming that Thesaurus payroll is the same.
Thesaurus doesn't have the link in with Xero. Xero is linking in with a crowd called Parola and Bright. But again, it would require a little bit. It's just not there yet. It would require a little bit of editing and overview. So you may as well just populate the journal from month 1 or even week 1 and roll it forward, or need to roll it forward 52 times or 12 times or fortnightly, whichever it is.
Patrick, how long do you think it's going to take before Xero has the usable payroll module available? I mean,
so Ian be better for that one. Ian's linked in actually with the Xero tech team that's based in Ireland. So Ian.
So Xero have a global system, a UK system, and a South African system, and we're all currently on the global system. That's why they haven't got the payroll set up yet. But they have moved, or they have increased the staff from 2 Irish Xero staff to 8, and they are this year bringing out an Irish Xero version. So there will be payroll directly linked in with Xero going forward. And they're bringing out Irish-specific reports, an Irish-specific, it's VAT, but you don't need the VAT returns. So they are investing in Ireland, which is good. I think our experience here in the office would be replicated by all of the accountants in Ireland, like 1,500 of us, is that we've gone from Sage and Big Red books and TAS books to Xero, and Xero have also now got the link in with Claude, so that's going to make things much easier for your budgets because it'll link from Xero to Excel using Claude, and it'll be linked back to your data. So Xero putting in the money, and I could see that there would be, at the end of this year, I could see there would be a dedicated Xero payroll package, and it'll probably be very cheap, like it is in the UK, $5 to $20 a month, I would expect.
Yeah.
Like if anybody wants to go, there is also more software if everybody wants to go to an accounts payable system instead of posting just the bank and posting purchase invoices because they want to record how much, or they want to know at any stage how much they owe people. That also could be done in Xero. We didn't want to complicate things today for this, and we've really just focused on the bank, but that also is possible.
Yeah, and there is a next step up in Bright as well, that like from a calendar and employee kind of management role where you can have portals and stuff, so that employees can pull down their pay slips at any time. They can request days off, annual leave, and you have a full oversight calendar of who's in, who's off, and the number of holidays that each individual has left. So you can always go an extra step.
Yeah, we would use BrightPay. It's very good when you might have an employee that is paid through two different funds.
Yep.
So many hours per week might belong to one fund, and then the balance could belong to another fund. And that portal is great because they can request their leave. You can put up there your staff handbook, their contracts, stuff like that.
Yeah, and again, like if anybody decides that they need help around migrating that, we do have our payroll team here. Especially, we have a qualified accountant, Jen, that looks after all our payroll migrating. So it is really, really good, and it is the most modern one that I've seen a lot of entities across the board move to. Any other questions, anybody?
Yeah, I want to ask something as well. For example, you have a fund, and at the end of the year, there's an overspend of €10, let's say. How do we journal that at the end of the year?
Yeah, so it's literally just a manual journal. Now, where the overspend would have actually came from is it would have used an unused fund brought forward from a prior year. So let's say, for argument's sake, you had €1,000 brought forward in relation to one restricted fund, and you got €50,000 in. You now have €51 grand to spend. If that's sitting in one account, or say, for argument's sake, you can only bring that down to zero. Is the first thing. If it's migrated in with other funds, well, then you've obviously used a different fund, and it just be a journal. That's it.
Just a journal with a different fund, then.
Yeah,
with the tracking categories on the journal. That's the difference. Yeah, so you can do a journal between the same bank account. No, sorry, the same income stream with different tracking categories, and it'll move it around for you.
Okay, thank you.
Just had a question
Sorry, go on ahead, Patrick.
Thanks. It was about, I noticed that you were using deferred income there on the example that you pulled up. Would you also use, like, sort of have reserves set up?
Yes, you would. Yeah, you would have your reserves, your restricted funds, reserves, all the way through. Like it is required in the actual wheel report that I'm showing you there on the SOFA statements, or just below. We'd have it there, and we'd also have a reserves note in the balance sheet as well. Replaces that.
Because we used to use deferred income, and which it worked out fine, but it's a little bit was a little bit cumbersome, and we found it easier then.
It is, but see, remember, you have to achieve the accruals concept. So if you have received money in and it is unspent, it is deferred. Okay, so it finds its way into your balance sheet because it is a liability that which we potentially owe back or can't spend until we achieve criteria. So you're always trying to match like with like. If you have €100,000 coming in and you've only spent €20,000, you've got a surplus there of €80,000, which is not correct. Because we don't want to show the surplus in our accounts of 80 grand. We would defer the 80,000 element until we have the 80 grand expenditure.
So you have an element of reserve and an element of deferred income appropriate to the period.
Yes, because your overall bottom line of your total income and expenditure to be a SOFA finds its way into your reserves. That portion does. But the unspent element is held to be spent.
Yeah.
That's all it is. And deferred income is effectively unspent grants. It's very similar. Like you'd have the accrued income you're probably seeing, which is grants that we should have received in, say, the year 2025, but they landed in January. Well, we should record it backwards. That's all.
Yeah.
Alan, I'm sorry to ask you this question again, because I just want to get it straight in my head.
Yes.
And because from previous sessions, I was of the understanding that SORP is mandatory, and from this year we would have to prepare our accounts to SORP standard. So I just want to get it clear. Is it mandatory, or is it just that they're recommending it as best practice?
It is still recommended best practice.
Okay.
Yeah,
okay.
It is not mandatory in Ireland.
Okay. Okay, great.
Their wording is it will be.
Yeah. Okay. So I thought my understanding was it will be from the 1st of January this year. That's what I was understanding.
Basically the way all kind of, we're part of a network of about 1,500 accountants, and the way everybody's taking it is this is the opportunity to get ourselves ready without having to look back on comparative information. This is the year to get your comparatives right.
Okay.
But it is
best. We were told 2025 was the comparative year.
No,
that's
not this. Yeah, no. Well, we thought so too. We all, and then they brought it out in January. They updated the SORP, and they still haven't made it mandatory.
Okay.
They're going to look at the audit exemption. Yeah. Sorry.
We're just over the threshold of that income threshold of taking us, which will take us up to tier 2, and we're just literally on the cusp of it. So, obviously, there are the requirements quite different between the tiers, are they?
There's just more reporting. Yeah, there is, unfortunately, and why they treat
we're literally just over the cusp.
It's either you're over or you're under. That's it.
Yeah.
And then they set out, this is the rules that if you're applying SORP, this is what we follow.
Okay.
That's kind of where you want us to be. Now, year 1 of anything is always going to be the hardest, but that becomes the templated basis going forward.
And let's say, Alan, if we say, okay, look, we haven't got funding to do this year to change over to 0, but it's something then we'll look at from the 1st of January 2027, and we continue doing our accounts in the big red cloud and get them audited as we have done every year. Is it a case then we can migrate and do it from 2027, or we need the comparatives for 2026 to do that?
At this moment in time, yes, it would be no problem. It's just assuming that SORP don't come out and say, hey, it's now mandatory from 2027. But if they did, it just means we would have a little bit of extra work to do to get the comparatives right. That's all it is.
Yeah.
It's, you can always...
I have to obviously speak to my manager, but like realistically, I just don't think swapping over at this point in the year would be an option that might be available to us,
Of course.
Well, with the bank, with the bank fees, it actually makes it easier to go backwards. But again, it's more of whether you can afford it or not. You know what I mean? But it is, because you're training the computer, it's different to normal, the way we used to always move. Like we would never have ever moved over anybody mid-year previously, ever.
Yeah.
Because you're training the software, you either go backwards or you just stop using one software at the end of a quarter and start. The sooner you start, the sooner you're training the software. It's the training of the software that's the key part. So, and you're actually training yourself as well. It isn't something like it was in the old days. It was such a huge change that it had to be at the start of a new financial year.
Yeah.
Where it doesn't make any sense. It doesn't make as much sense anymore, because once you do January 2026, for example, February and March, 90% of those transactions should actually auto-populate practically for you. So you'll be able to do January and February and March very, very quick. So, and then you're straight into April.
Yeah.
And don't forget, you're not manually entering anything anymore, because what you're just doing is you're just uploading a bank feed. So every bank transaction that's happened from the first day of this year is now auto-populated in your software, ready to be told what to do. you're not
And each of those
actually,
bank accounts can all, because ours are standalone bank accounts depending
yeah.
on the funding stream come through. So each of them is going to come in separately. They won't.
Oh, they always
They
come in
come in
separately. And even
separately.
better for that as well is that in Zero, you're allowed to set up different rules for different bank accounts. So
Okay.
when you're doing a
But
rule for one bank account, you can say, look, this is the rule just for this bank account, and I don't want you to migrate that rule over to different bank accounts.
Okay, because we have one bank account because we didn't want to open any more bank accounts, but we've two funding streams come into that bank account. Like we've 8 bank accounts, so we're not opening any more bank accounts, but we have 2 funding streams come into one bank account, so they can be separated out though with different.
They can be separated, and just think about where we're heading towards. We're heading towards one bank account because it won't make a difference anymore where it comes in, because once it comes in, we'll allocate it to restricted or unrestricted. I know 90%, 99% is going to be restricted. We're going to allocate it to a fund, so it'll already be
Okay.
there, and then all the expenses will be allocated. So at any moment of time, we'll have X amount of money in one bank account, and we'll be able to, because of Zero, we'll be able to immediately know how much money of that is brought forward from last year
Right.
and
Okay.
unspent income this year. So you will actually, you will start reducing your bank accounts instead of
Bank
getting
charges.
more. Yeah, well, this
Yeah,
is the thing.
exactly.
Yeah, bank charges is completely waste. But don't forget,
Yeah.
and even if just as a very simple, what usually gets a lot of people to move to software like Zero is that once you set up a rule for bank fees, you never actually will post that bank fee ever again.
Ever.
Yeah.
Ever. The Zero you'll turn on AI
good.
and every single bank charge will be posted by the Zero for you. It'll never happen again. You won't even see it, only in your reports. And it's just that time saving will allow you to migrate your Excel into Zero, and then you'll be able to then do all your budget things in Zero, and you will spend more time being productive with doing that kind of work, the budgeting and getting ready for more funds and applying for additional funding, and away from the manual day-to-day bookkeeping.
Okay. Thanks, Ian.
Brilliant, brilliant. Any other questions, anybody?
Well, I didn't really get what Ian was saying there about the bank accounts. I wasn't sure.
Yeah, no, it's just at the moment you separate all your bank accounts because you want to separate the funding when it comes into separate bank accounts.
Sometimes you have to, of course, sometimes have a separate account for certain funding streams.
Exactly. So
In our case, anyway.
Yeah,
if they don't make you have a separate bank account, it doesn't matter. Once it's in Zero, once you start recording in Zero will always record the money in and then the spending against it. You won't need to go to Excel. You will always know at a moment, at every single day, how much of that fund is unspent.
Right.
So, and I know a lot of people use the bank balance as how much is left to be unspent. But you can use Zero.
So you could have one bank account in Zero, but like we would still, because each funder, and when quarterly or monthly reports go in, they get a copy of the bank statement as well. So like that's part of the reason why each funder has their own. Like it's part of the fund the reporting requirements that a copy of the bank statement goes back in. So they would still have their separate bank account, say in Bank of Ireland, and because they need that specific funding has to go back in just on that bank statement.
And so what would they use? What would they do with the bank statement, you reckon, on their side?
It's just part of the funding requirements for reporting that. I suppose it's to show that the closing balance that I'm saying is
actually half
the
the
closing
funds.
balance.
Yeah,
you know,
and like eventually, like when everybody has to go digital, like we're talking about 3 or 4 years out from when everything, like people will have to receive everything digitally and send everything digitally. I know that won't affect charities as much as people who receive purchase invoices and issue sales invoices, but that's where we're heading everything to go digital. But if you had the reports in Zero now, you mean it may become standard that you would give the report instead of giving the bank statements, because if you're giving the bank statements, it sounds like someone is checking something else on the opposite side. And if you're able to see, well, that's not. Yeah, there's no need for that anymore. We have this report. This is
it's all government departments that we're reporting back into. So if they say part of one of the requirements is you send a bank statement in, they get the bank statement.
Oh God, you do what you're told there. Yeah, exactly.
Yeah. You do.
That's it.
But there'll be some that will eventually, over time, be able to migrate. That's it.
Yeah.
So
certain funders of ours actually require us to prove that we spent the money. And
we
so
have to hand in receipts.
But not even receipts, but actually bank statements showing that the money has actually left the account as well. So there's an awful lot of redaction going on then as well.
Of course.
Yeah.
They're doing overkill.
It's a pain.
It is. I'm just trying to think of what we could do there. Like, because if we had, is there an opportunity there, Alan, to let someone have read-only access to a certain part to Xero? Probably not.
Well, it all depends on who the contact is and their willingness to engage with us and their abilities to tick things off. Because if we were to use Xero and everything that's paid and received has a remittance or an invoice or a receipt attached to it, a picture of the invoice is already there. And if they have read-only access to our Xero, they would be able to view the matching corresponding purchase invoice and receipt that has been spent. But that has to have a willingness on their end to do that.
Yeah, they're probably miles away from that, but it's
I say they're miles away.
Yeah.
But it just means like you can always go in. Like you need to get if we're to just think on the process there, you would have to you probably scan a copy of your invoices, put them in a folder, send them in or whatever. Now you'll be able to just take the invoice, drop it into your Xero. It's all there. We can download them. The PDF's there. Or we can put them into 2 folders, whatever. We can run our bank reconciliation report rather than sending all the bank statements. We may be able to say, well, here's our reconciliation report for the full year, and here's our final bank statement, which confirms our balances, and here's all of our invoices. It just depends on their willingness and their appetite for change.
Yeah. Because someone is doing work on the other side. If they're getting that information, someone's definitely looking through it. So
100%. It's not just sat on file. They will be looking through it. And the main thing is we can't there will be some issues and everybody will be different. Like Miriam, you're saying some things there that's different to what Patrick, your kind of view may be. So each Xero has to be tailored to suit individual entities. Yeah. That's what I'm saying. It is very much it's a hand-on, individualized setup for each one.
Okay.
But the chart of accounts across the board for every entity can actually be consistent. Definitely. So, and I know like any sort of change to Xero can be quite daunting from Excel. Maria, I might pick on you. You have seen Xero and a migration from Excel to Xero. I know you might have a quick glance at it, but it was a bit you were unsure. How do you feel having looked at it since we last spoke?
I feel like it's going to save me a lot of time going forward.
Okay.
And I find it's very easy to use as well. So just put everything into the categories, and we've been using BrightPay as well. I started that last week. So yeah, I find it very easy.
What did you migrate from with to BrightPay? Was it the source or was it you used before, like historically yourself?
It's a lot easier actually for D17 because we're just starting off new, fresh, like everything. So we didn't have to transfer anything across. So it's all from the beginnings.
Yeah, of course. And you obviously linked in with Jen, actually, wasn't it? So
you
know the famous Jen. So there is support there. We do have a team, but there's about 15 of us here. So we do have the support. If I'm not around, Ian's always around, or vice versa. No, perfect. No, that's it. It's just more the experience. Obviously, Patrick, you had experience on transitioning to SORP initially. Yeah. How did you find the administration of it in terms of getting the additional information into, say, the trustees report? Cumbersome or?
Well, it was an exercise, of course. What we had was we took it from a trial balance initially, and what we had then was we also created a second dimension, if you like, going off to right to left or left to right. So what we did was we grouped our activities in big groups, like, for example, HSE funded health services, mental health services, youth services, education and training, and community development. And then within those, we kind of fitted in, shoehorned like sort of 5 or 6 categories. For example, it could be the traveller health unit. And then within mental health, you might have traveling to wellbeing, which is a program we have. The youth services, then we have our main youth service, but then we also have a couple of little additional ones that we're running as well. And then within education and training. So what we did, the exercise was to kind of analyze what we're doing and categorize it, which in itself was a useful exercise, but it was time consuming. So we kind of had to agree all that. The other thing we had was an awful lot of nominal codes out of Sage, maybe more than we needed to have. We were kind of huge granularity on the breakdown, which was legacy, which I kind of inherited. So it was also part of it was just tidying up the number of income lines and the number of expense, the level of detail within the expense that we probably didn't need, but it was an Excel exercise. So we were starting out with a period trial balance. Then we had then in discussions with the auditor, we came up with a series of about 14 journals to get us to agree and make corrections. And then we ended up with a kind of a revised trial balance, which then kind of fed into a detailed SOFA. And then we had a kind of a more user-friendly SOFA version, which was the one that we published in our, in annual report and charts.
Of course, And so basically, what you done there was an Excel version of what we're seeing in Note 4 of the different income streams, and the final page there, and the way of basically saying it all combined.
Yes.
I'd imagine then, because it was an Excel exercise last year, it would be a very similar Excel exercise for the year ending 2025.
Yeah.
And because it's almost like doing it twice. So the aim would be that had you done it just the once in the software, that next year it doesn't need to be done again. You're more focused, your zone in is on the narratives within and focuses on the trustees report and saying all the great work that we do.
Yeah.
Perfect. And that's the real kind of practical experience of it is we're not reinventing the wheel. We're just creating a new base, a foundation to bring forward. That's it.
Yeah.
Perfect. Okay. Anybody else? Any other questions on Xero or anything in general?
No, Alan, thanks for answering so many of mine.
Thank you.
No, it's not a problem. Look, I will drop my email into the chat box here now. And if anybody has any questions or anything like that, just feel free to reach out or give me a bell. There's no problem. As I said, we'll obviously do some of the audits. If anybody needs a hand running their audits or the migrations or whatever, feel free to give us a shout, okay? That's my email address there in the chat box, okay? And there's Ian's. So.
Ian's one is there as well. And if anybody has any other questions, you can feel free to get on to myself or Sharon. We might have a brief meeting just to debrief next week, maybe for half an hour or something. Just
That'd
to
be great,
Anne,
yeah.
If there's any other questions. Yeah. I'll say that to Sharon when she's back on Friday. Listen, can I just thank everybody for coming, and thanks in particular to Alan, Ian and Patrick for sharing all of your knowledge and experience. I'm sure you will be getting plenty of phone calls and emails.
Not a problem. That's what we do. Not a problem.
Thank you so
Happy to answer them all.
All right.
Yeah.
Happy Tuesday, everybody.
Thanks so much, everybody. Thank you.
All the best.
Cheers, guys.